Welcome once more to another Agriculture Today on the K-State Radio Network. Appreciate you being along as we'll delve into those grain markets once again and get the comments of grain market economist Dan O'Brien, K-State Research and Extension, joining us as always from his office in Colby, Northwest Kansas. First off, something that's fairly general, Dan, but it's becoming more evident as a market factor. That is, we've harvest pressure being brought to bear on prices, at least on a day-by-day basis, including the trade yesterday.
Yes, you can see corn futures having dropped from a high of just about 380 down to yesterday's close about 363, and actually, given that we have dry weather, we're rolling in the fields pretty quickly in central Kansas for sure, and we're down parts of southeast Kansas is what I could see earlier than that, and coming into the west almost underway up here, and if not. Probably some areas for wet corn, we've been cutting that for a while and seeing at the feedlots out in our part of the world. So anyway, yeah, we'd expect that. And in terms of local supply demand pressures, when you have trucks lined up outside of local elevators or hauling to their own on-farm storage and being ready at a moment's notice to pull the trigger to do so, to haul those elevators, ethanol plants, you name it. You have some weakness in the harvest. I think in harvest basis anyway. I think you can see that when you look at the ethanol plant bids too. For Kansas, bids range from 35 under the D's contract to 5 over, and we've been running 20, 30, 40 over. For weeks, basically. So that's kind of transformed the top end of the Kansas ethanol plant basis bid from what had been the highest bid overall in the country, literally on a state basis, down to 5 over. And you see other states, again, Indiana, Ohio in particular, at 28, 25 over. Even in Iowa, even to 7 over. And interesting also to see in South Dakota, Wisconsin, 30 under. So to a degree, that's almost a barometer for what's happening out in the fields in those areas. How strong those ethanol plants feel they have to bid. So that's interesting. Also telling on the ethanol plant side is that there is no bid that we have recorded anyway for yesterday's report, September 24th, on grain sorghum going to ethanol plant. So still focusing on the export side on the grain sorghum part of our ag industry.
Want to come back to some information that you've worked up on the current profitability in biofuels production, but bolstering these markets yet are the grain sales largely to China. Might note that there was a brief interruption in that string of several days where China was aggressively in the feed grain and soybean markets. Nonetheless, that is really helping these markets remain somewhat steadfast in the midst of potential harvest pressure.
So here we were talking about a 20-cent drop in corn futures, in D's corn futures, and at harvest time. Well, gracious sakes, if we wouldn't have the strength we have in general in the export markets, would it be only 18 to 20 cents? And instead of looking at D's corn futures around on yesterday's close 363, while in the midst of what could be a sizable harvest, where does that go? It's surely below 350.
Yeah,
so
anyway,
yeah, way farther than that. So the underlying support there is positive. When you look at both sorghum and corn for forward sales, we're about 3 weeks into the current marketing year. There are forward sales ahead of about 38% for this 2.325 billion bushels of corn that USDA is projecting for this marketing year running September 1 this year to next August 31st. And for grain sorghum, it's 42%. So even though the weekly numbers right now aren't that great, and they've been fluctuating, still the forward purchases are strong. And I would say for wheat, now here we're basically, for hard red winter wheat, we're about 16 weeks into this marketing year, about 31% of the way in, and we've got about 45% of the USDA's projection, 410 million bushels bought. And actually for overall, all U.S. wheat, which means there's some other classes doing a little bit better. Again, 16 weeks in, about 31% of the way through, and 51% of the way bought ahead for that. That's a combination of what we've shipped so far and what's out there coming. So still the maintenance of some optimism in the wheat markets. And I think it's telling also that in the midst of harvest pressure, we've saw corn drop 20 some cents over the last several days. We've seen some weakness in soybeans in the same market where for corn we for these other crops we'd seen fair sizable drops. For wheat we saw 1 or 2 cents lower. So there you go. It's quite the deal for wheat kind of holding up strong. And so you've got this puzzle internationally of who's has a good crop and who doesn't, and you get out of the Black Sea region, you'll have independent analysts say, "Oh, we got problems." The government will come out and say, "Oh, it's just wonderful." So I think we've seen this before.
Right.
I would say, as we're talking about wheat, before we go to beans, that there's a major report coming out on the last day of September, on the 30th. That'd be Wednesday of next week. We'll have it's the annual small grain summary. For us, we watch the wheat numbers out of all that. So that's a potential market mover if there's a surprise. Generally, hasn't been a lot of major surprises on the wheat side, but it is a report. That same day there'll be stocks numbers, and of course we've just been talking about feed grains, and we think we have pretty good handle on what ethanol plants have been using, which is about 87-88% of what they were for corn usage prior to the COVID lockdown. So we've recovered some, but not all the way back. So you got that, so probably the big number there will be corn feed usage that we'll be looking at to try to deduce that and see how the supply demand balance sheet comes in. So watching all those things, and then of course that October supply demand WASDE report will come in about a couple weeks later, and they'll use some of those numbers. Eric, is it okay if we go and talk about soybeans also? So
yes, I was going to prompt you for that. Yes.
Okay, kind of complete the loop on this.
Yes.
For soybean export sales. So here we're 3 weeks into a 52-week mark, and you're just about 6% of the way there. And we have new crop sales of 61% of the USDA's projection. 2.125 billion bushels. So we wonder where the strength in the soybean market has come from. Well, in the midst of harvest, you've got China with all its issues, and everybody else in the world figuring out what's a good buy, what's not, and at the same time that Argentina and Brazil have their own particular issues. One's out of soybeans, the other has internal problems. That'd be Argentina. So with all of that, we're basically 1.3 billion bushels of the way to this USDA's projection of 2.125, with not a lot of other places in the world to go. And I'd put together, we had a KSU put together some scenarios on where prices could go in soybeans. And really for me, it's kind of taking and scaling up 100 million, 200 million, or more bushels of soybeans sold, and figure out where that goes. Right now, the USDA is projecting for this marketing year a price about $9.25. It seems, as you keep moving up that curve, for the first 100 million bushels, it looks to me like you go from $9.25 to $9.75, so about 50 cents. For the next one, you're getting tighter and tighter, and it's a nonlinear relationship going up. You're going up about $1.25 then to about 11. And if you get off into next year and have any type of if U.S. soybean production this year in those dry areas, and they still are extremely dry in Iowa, in Indiana, Ohio, and we have surprises elsewhere. They had the windstorm that stripped things up. Say we drop 250,000 bushels, 250 million bushels, 250 million, pardon me, off of that, and tighten things up. Then, with the demand we've already got, then you're getting down to basically a 5% stocks to use, and we're looking at $12 beans or something thereabouts again. So although we're pretty docile right now in terms of this, here we have this demand and uncertainty as to where the beans are going to go, and there's there's a potential for a fair amount of support for these markets and some real volatility in coming months.
What you're saying, Dan, is that there is a good chance that the bean trade will at least stay north of $10 for a time.
Well, again, I guess if we're looking at the data, test that on yesterday, it closed right on $10. So we're going to be able to answer that question, Eric, pretty readily, because yesterday November beans closed exactly at 10. So where do we go from here? And harvest is right ahead of us. If we come through harvest and we do not see that thing break lower, then you'll know, my goodness, there's either there's a supply issue or demand's continued, and the market is worried about having enough supplies to really fulfill the U.S. and world demands.
Want to quickly circle back and lend just a few more details, Dan, on the profitability in biofuels production. You've worked up the numbers, and that profit level is on the mend, you say?
Yes, it's over the last several months. Ethanol plants haven't been losing as much money as they had been. Quote, on a per gallon basis, up in the midst of the COVID-19 things, we were dropping to 12, 15 cents per gallon loss, and you were seeing closures and delays and refittings and all sorts of things. Well, we've come back some, and a lot of that was on the strength of the economy improving and bringing up ethanol prices some and lower corn prices. And so on monthly averages running July, August, September, we're basically kind of locked in at about break even to about 3 cents loss. Now, it was really something to see what happened to all of that in this most recent week that we had that finished on September 18th. Suddenly the corn price jumped up to about 350. And with that, and given where everything else was, then suddenly that 3 cents per gallon loss dropped about 19 cents a gallon. That was a 1 week deal, but that just shows how sensitive the profitability of those plants are to what happens to corn prices. So it's for farmers, farmers would want the higher prices for sure, but there's a reaction to higher prices. It tends to make those who purchase the input they have less profitability in what they're doing. So right now we have kind of a fine balance going on. We want all sorts of bushels to feed these uses. By golly, if we don't, the price raises up and we start to choke off the demand. So I guess it's so here we are in the midst of a harvest season. And we have things just tight enough that we're balancing supply and demand and wondering how to thread the needle to maintain usage while still holding up prices at a decent level. So we shall see.
As you said earlier, we will come next time we visit, have a bucket full of new USDA numbers on wheat planting intentions, on supply and demand. So we will take all of that up as we talk next week. Dan, thanks, as always.
Thanks, Eric. Take care.
The weekly grain market analysis and comment from grain market economist Dan O'Brien, K-State Research and Extension. And you're tuned to Agriculture Today.